Hey guys, how's it going? We just got the closing bell for Monday, November 20th. Uh, quiet day. It's been a holiday week, so we are expecting a quiet day, and we got one in terms of volume, but we did actually get some movement and some directionality in the market today. So let's take a look at what that was and what might have caused it. So when we look at the S&P on the intraday chart, we see that we got some directionality. We started moving up, then we moved up even further, consolidated. Then we jumped up and then started moving even higher before pulling back finally towards the end of the day. So what we're really interested in is this right here. What happened at 10 a.m. Pacific, 1 p.m. Eastern, that might have given us this little boost right here, because the real directionality is coming over here. It's not in this first half. There's a little bit. This was still normal movement and normal muted movement. Overall, on in terms of an upward move, we are plus 0.77%. So that's kind of a low to medium or average movement for the S&P 500. So what could cause this later half to really move upward and bring us into a average movement territory? So when we look at our economic calendar, the only thing that we see happening is nothing. Oh, no, sorry, the 20-year bond right here. So a long bond was auctioned, and it must have gone pretty well, meaning that rates were not that high on the bonds, meaning that there was a lot of demand at lower rates. So let's see what happened in TLT. And TLT, you can see it looks like it's breaking above that horizontal line that we drew right here. So that would be definitely bullish for both stocks and bonds. And we can see right here, the same thing happened in TLT. We had a huge movement upwards right at 10 o'clock, and then it really consolidated for the rest of the day. So it really was this bond auction that kicked us off. So this bar by itself is not a huge movement upwards. We don't have the volume, which we wouldn't really expect during the holiday week anyways. And the size of the bar is not that big. Maybe I need to delete these lines so we can see more clearly. If I look at the top of this previous bar versus the bottom of that previous bar, it's about 80% the size of the bar that we got today. This bar is definitely bigger. This bar is slightly bigger. This bar is bigger. So you can see that this is not a huge bar that we got on TLT. So I wouldn't get too excited and call this a breakout that's going to run away. I would take this with a bit of caution. We can see that in the S&P 500, we got a bar that brought us near the tops over here. So we'll see. We'll have to see what happens tomorrow, whether or not we can break through this resistance right here, whether or not there's continued stimulus for the market to go up, and it might come in the form of bonds again. So let's take a look at that economic calendar. We've got really just T-bill announcements, 2-year note, 10-year tips. So maybe, and then we have the FOMC minutes. So if the Feds said anything surprising in the minutes, then we might get a surge either up or down. Or if they strongly reaffirm that they're not going to raise rates, that could send us a little bit higher. However, if there's a lot of language in there that says, hey, we're not done yet, we have to wait and see, we still need to look at the data, we're very data dependent, then that could bring the market down a little bit. So it just really depends on how strong the language is around the idea that we're going to pause and keep the rates the same. Other than that, the thing that we really want to look out for this week, especially since we've got thin volume, thin participation, is out of all these stocks that are reporting, we've got one that we really want to pay attention to, and that's this one right here. NVIDIA. We've got a couple other big stocks, but NVIDIA is one of the Magnificent Seven, and it's really been responsible for a huge amount of the growth in the S&P 500. So we would want to pay attention to that one really closely. If they can keep on giving very positive guidance, then NVIDIA by itself NVIDIA could possibly send the entire market higher. But if they miss, or if their outlook isn't so great, NVIDIA by itself, especially this week, could bring the market down to a pullback, to the pullbacks that we've been talking about, which is filling this gap or coming down to this this MA90 line right here. Lost some of my, interesting. I lost my faster moving averages. I'm gonna have to get them back. But in any case, we might pull back because of NVIDIA, or we could break out because of NVIDIA. So I'd be very, very careful holding positions through NVIDIA earnings. Normally, we would only care about NVIDIA or related, like semiconductor stocks, maybe some technology stocks. But this week, because of the participation being low, we want to be careful no matter what stocks that we have. So we want to be well hedged and non-directional, or just flat going into NVIDIA earnings. And I believe that is tomorrow afternoon. Let's double check that. Yeah, Tuesday after the market. So we want to spend tomorrow getting fairly neutral or picking our directions very, very carefully, because we don't know if NVIDIA is going to beat by a lot or not. The expectations that are placed on NVIDIA right now are huge as one of the Magnificent Seven, and as the stock that has been leading the AI chip frenzy. Performance and their forward outlook are going to be critical to how people feel about the market, especially in the tech and the semiconductor sector. So either way, if they miss, or even if they do well and they just don't have as good forward projections as people had hoped, that could send the stock coming down quite a bit and drag the market with it. And if they beat by a lot, if they beat and have high surprises and forward outlook, then that could go way up. So we'll just have to see. I don't have any insider knowledge, so we just have to wait and see on that. I would be super, super cautious. Tomorrow, spend your time preparing for that, however it is that you want to prepare, whether it's flattening, hedging, or maybe you think you know which direction it's going to go and you want to put some money to work. But I would be careful on your allocation size if you do that. I think that's about it. It's been a quiet day. We did get direction. So let's see. Let's take a look at the S&P again. Yeah, that directional movement today, mostly stimulated by that bond auction. Let's see if it changed any of these percentages that we were looking at earlier this morning. Still at 99.8 on December. 99.7, so that's interesting. We got 0.2% moved over to actually a rate cut in January. That is way, 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 way optimistic, in my opinion. March, looks like we moved. So it looks like a little bit slightly favoring no rate hike. So we've moved a couple of percentage points, or 1.4 percentage points towards no rate hike. And then let's take a look at May. In May, we also moved towards no rate hike, away from this 50 basis point cut. 50 basis point cut. That's, to me, that's absolutely ridiculous. That is a huge amount of stimulation. Normally, the Fed only cuts or raises by 25 basis points at a time. there's only a couple of times in the last couple of years where they raised by 50 basis points because because if you recall, the Fed had to play this catch-up game because they kept saying that, oh, inflation is transitory. Inflation is transitory. We don't need to do anything. It's going to come down by itself. And then they said, oops, we let it go really far for really long. And so we need to raise by 50 basis points at a time for a few rounds so we can catch up and start bringing that inflation down. So a 50 basis point move at a time would imply the opposite happened. Oh my gosh, we're imploding. There's a huge recession happening and we didn't catch it and we just need to stimulate like crazy. So this number here is very, very crazy to me. So if we're going to even out into something more rational and reasonable, then this 13% moving over here or over here, or maybe even some of this 25 basis point rate hike moving over here to no rate hike, that would imply a pullback in or movement downwards in TLT, and that would put pressure on stocks. We really need, in order for healthy markets, in order for markets to really be able to sustain and move higher at a significantly higher, we really do need a pullback before we move upwards. So any continued movement upwards right now without the pullback is just going to be muted and limited. So right now we're moving up at this +3 ATR. We're just crawling up with it. And maybe we can get that for another week, but there is a pullback imminent. So we showed that before, but I'll reiterate it. Where, for example, over here, 1, 2, 3, 4 along the +3 ATR, then we pull back. Or 1, 2, 3, 4 along the +3 ATR, then we pull back. Only one, and then we pull back. So we really don't stay up here very long. This is the, what is this, 2021? 1, 2, 3, maybe 4, 5, 6, and then we pull back. What was that November that we saw before in 2021? Let's take a look. Did I miss that one? Yeah, even this one. So this huge run up in 2021 November, still it only went along this +3 ATR for about 5 days. The rest was along its +2 ATR, and then finally when it hit its +3 ATR, it just wasn't sustainable, and you had a pullback. So right now we've had 4 days already, 5 days at its +3 ATR. So we're really going to start expecting that this cannot continue for very much longer. Again, we don't know exactly when, but for normal healthy markets, this has to pull back some. If it doesn't, and it just keeps going, all it means is that we're going to have an even harder and even worse pullback even later. So for example, if this gets artificially inflated, if the Fed tomorrow says, emergency meeting, we need to stimulate, let's stimulate 25 basis points, and this goes screaming higher. And then they do it again a few weeks later, and it goes screaming higher. And then when the market wants to pull back, they do it again, and it goes screaming higher. It just means that when they stop artificially pumping up the market, then there's going to be a huger crash. So the sooner this pulls back, the better it is for the market, because then we can resume that movement upward. But we'll see. We'll see. I am expecting, barring some outside forces in the market, for this to start pulling back. That doesn't mean I'm going to go short or super short. I might take 1 or 2 shorts, but my overall positioning will still be long, because we did break this downtrend, and we are now in an uptrend. So just what we would expect is that pull back to a higher low and then move up to a higher high. So overall, still a positive uptrend. Most of your positions in your longer term or medium to long term positions would be to the bullish side. And then just very temporarily, very short term, you would be looking possibly at 1 or 2 positions to the downside. So let's see. That's it for today. We'll see if we get anything else to look at tomorrow morning. Otherwise, have a great day, and I'll see you in the morning. Bye, guys.